count down, and then 1 minute of introduction, and then we will start. Let me count down and hand over to Pawan. Pawan, hand over back to me, and I'll do the introduction, and then you can start.
Sir, YouTube live streaming have started, sir.
Yes.
Yes, sir. Now YouTube live is also available, sir. Now we can start, sir. So
welcome. Dr. Please start.
Yeah. Welcome all pediatricians of the state and across the country. Thank you for joining for this wonderful session on financial fitness or financial intelligence for pediatricians. Now I welcome our team lead, the lead coordinator for this entire wonderful workshop, who is determined that every pediatrician of the country is well equipped with the financial knowledge. That is none other than our beloved Dr. Ajay Kumar, sir. So, who is a legend of Telangana Pediatric Academy. So, welcome you, sir, for his selfless service, for his selfless contribution for the growth of financial growth of every pediatrician of the state. So, welcome you, sir, for this program. And today's speaker, Arjun Reddy, who is a very close friend of mine, for an excellent talk. I am sure that he's going to rock the show. He's a rock star of our financial fitness program. So now over to Dr. Ajay Kumar, sir, the lead coordinator of financial intelligence for pediatricians.
Thank you very much, Dr. Pawan, for that wonderful introduction. I'm overwhelmed. This is the Financial Intelligence for Pediatricians program from F3 team of Pediatric Academy of Telangana, Hyderabad. I am Dr. Ajay Kumar, your coordinator for this program. We are into the 13th session lecture of this year, and we had galaxy of speakers. This virtual webinars we have started almost 3 years back from Hyderabad to the pediatricians all over Telangana, Andhra Pradesh. Now it has spread across India and internationally, also all over the world. This is an educational and awareness program purely for improving the financial literacy of the doctors, and we do not give any investment advice, and we request you to do your own due diligence. And please take the financial advice from a qualified, SEBI registered, experienced professional. We do discourage any speculation or day trading or using tips or advices from the in the stock investing. We had previous speakers, Dr. Harish Gopal, Dr. Pawan Kumar, Dr. Tirumalai Kolandu sir, Dr. Sindura, Dr. Vipul Jain, Dr. Indra Pawan, Dr. Satish Vadapalli, Dr. Chape Soren, Dr. Ajay Kumar Gupta, Mr. Balwin Jain, Dr. Naresh Biani, Dr. Wilson, and today we have got none other than Dr. Arjun Reddy. We had topics which we discussed earlier are financial planning, insurance, debt funds, mutual funds, index funds, stocks VIP model, basics of stock market, wisely invest in stocks for optimal returns, taxation for doctors, technical analysis by Dr. Biani, large cap investing, and today importance of technical analysis and a brief introduction of TradingView website. We all know that we are financial illiterate, most of us, even though we are educationally postgraduates. Most of us suffer from this particular peculiar effect called Dunning-Kruger effect, because we don't know that we don't know financial knowledge. That means inadequate financial knowledge to even appreciate that we are making wrong moves in our life and financially. So we request you to learn, accelerate the learning by reading good books, attending our webinars, join peer groups, gain knowledge, and try to manage your hard-earned money and deploy it properly. Make money works for money, when you sleep peacefully. Financial planning is a goal-based, achieve, ultimately aim for financial freedom. Also, plan for your retirement corpus because of the longevity of life nowadays. At least 30 years after retirement, we have to take care of ourselves. So retirement corpus build-up is a very important aspect of the financial planning, which very soon Dr. Harish Gopal sir will take that topic. So today, the importance of technical analysis, we have among us Dr. Arjun Reddy. He is a pediatrician from Hyderabad. He practices in Hyderabad, and he is also a co-guide on a WealthCon. He was also my co-guide in the TMP course as a scholar. I welcome wholeheartedly to this F3 FIP program. Over to Dr. Arjun Reddy.
Sir, good evening. And very happy, and I should say happy Sunday. And I should again say thank you for all to the members who are coming here and to the family who's letting them come here to join this session. And I should especially thank you for the seniors like Dr. Rajay sir, Dr. Harish sir, Dr. Pawan sir for creating such a beautiful platform. And then, and I'm getting a part to discuss my certain knowledge so that I can share and then I can co-learn along with you people. Really happy to have such a platform here. So sir has asked we should have a discussion about technical analysis so that we understand how to go about trading. So my presentation is very brief and I wanted to keep it very simple. So you just understand there, this is after learning the trading from different methods. So I have just simplified so that we can just take what is important to us, and I hope that this helps in taking certain decisions, especially when we are selecting a stock or a fund or so. This is so that's it. That's about my presentation. And then I'll also would like to introduce you to the application called TradingView. And I think it's like a stethoscope to a doctor. It has to be with you. And then the more you use it, the more you get acquainted with it. So it's a very beautiful platform. So let's start. Is my screen clear?
Can you make it bigger, Dr. Arjun?
Sir?
Yeah.
Is this
now
okay?
It's perfect.
Yes, sir. So I thought we should also include independence in this so that once as you are learning and as you are using, you should get independence about your own finances. So today we'll be discussing about the technical analysis. So like we approach any child or any case that comes to our clinic, we take a good history, then we do the proper examination, and then we use certain investigation. So fundamental analysis, we can put it in the place of taking history. When we find out the proper details about a certain company, and technical analysis comes with the examination part, where you are understanding the movement of the price and then you're taking a certain decision. And tools will help you to get confirm about your decision, whether you're going forward with the decision to buy or the decision to sell. There are only two decisions that we have to be prepared with, whether we have to buy or whether you have to sell. So what is a technical analysis? So the methodology for analyzing and forecasting the direction of the price through the study of past market. It is primarily based on price and volume, but we take price and time. How the price has changed over time, historical data, so that we can predict the future data where the price moves. So that is our second point. Price and time analysis, a simple analysis of price in respect to time, which is enough to take a decision. And what is an indicator analysis? Indicator analysis are certain tools that when we get into a trading view, we will get to know. So we are using these certain indicators to help in analysis of the stock in that particular moment and predicting what might be the outcome. So why is technical analysis? Like I have already tried to tell you, it is going to help us in make the decision. And the decisions are what to buy, when to buy, what to sell, and when to sell. Whenever you enter a certain situation, whether you are in the trading or you're about to enter a particular trade, there is always these two things that should come out in our mind. What are the possibilities of your current position and what might be the probability? The possibility is always the possibility is you have to expect the market to go down. Enter with the premonition that your position is always going to go down. So all combinations and all factors on the world are always, just remember that it's trying to put the price down. So that is a possibility. But the factual is the price can go in any direction. There could be any outcome. What are the probability of these? So we are fighting for these particular probabilities using our analysis to make it stronger, to make our decision stronger, that it might go in a certain direction and it will help us to take the decision. So what is price? Price is a ratio of money to the goods. And what is price time analysis? We are analyzing the price with respect to time, how a commodity or a value or an asset changes over a period of time. I've just given up a very simple example. A gold of 10 grams in the 1947 was 88 rupees. This is for 10 grams, and this is today's value. 10 grams of gold, today's price is 56,572. So what is the objective of technical analysis? What will be the future direction? Whether it is going to go up or whether it is going to go down or whether it is going to be in the same place. The second is what is going to be the speed of this particular price movement, whether it is going to go down very fast or whether it is going to go high very fast. These are very important. And level of reversal. When are you expecting a particular price or a commodity or your asset to change its direction? So we thought we'll put in some laws to understand what will happen to the price by our basic physics, correlation of Newton's laws. If a price is going in a certain direction with a certain velocity, it might continue to do so. If a price is moving in one direction and a force is applied, it might change the direction. And the third law, if the price is moving in one direction and an opposite force is applied, it will definitely change its movement in that particular direction. So why does the price change? What happens? Why is it moving in the same direction? What is the reason behind it? And the answers are right in front of you. The price value of the asset plus speculation. The word speculation, can you see how big it is? That is how it is. The speculation has such a big role on the movement of a price. The price of every share or every asset lies on the shareholder's hand. The more you take care of your asset, it moves in the same direction. So what are the dynamic constituents of any price? It is a price, the rumors behind it, the information that you get about it, the liquidity in the market, and the emotions associated with the asset. Price, every commodity or every asset has a price, but in the real market, it is different. Suddenly a rumor comes out the next day that Zomato is launching a new product or a new application, and then the price zooms out of bounds. And that's one reason for the price to change. Information, we get the MD of a certain company has called us and said, tomorrow we are going to take another company. You get the information and then you get in, and then it might go up with a very high speed. That is the information. Cash liquidity. if foreign investors are very much bored with investing in their own countries and they select India as the place to invest, and our Nifty starts to go up. So, and emotions, suddenly they say there's a war and then people start selling. And then these are the certain dynamic factors that do affect the movement of a price. These are the things that we should be aware about. So we should be very aware about the news that's happening around. Pattern of price movement. Always the price moves in pattern. There is sometimes a randomness, and price over period of time creates patterns. That is what we study, and then that is going to help us in understanding the movement, subsequent movement. And there is a third rule that price reverses at certain levels, and to furthermore, we have created zones. When do you enter? And we enter when the price is at reversal, or when you enter when there is a breakout at a certain price, or you take an entry when there is a momentum. So these three we will discuss when we are looking at the charts. So next, I hope I was not fast, and sir, is it clear?
We can have questions during or afterwards as at your convenience, sir.
Sir, if anyone wants any questions now, or we can directly go to technical analysis.
Yeah.
Or I mean to say the trading view.
Yeah.
So that we can elaborate on those.
Arjun, first finish off trading view, then we can go for technical questions.
Okay, sir. So this is the next thing is I want you to get acquainted with the best tool that is available, where every trader, no matter what kind of a profile he has got, uses this particular application. It's called TradingView. Just simply go to your browser and then open TradingView. And then you're presented with this. You go to sign in, create your own profile. You can easily ask your email ID. I think everyone is acquainted with creating their own login. And once you log in, this is the page where you are presented with. This is the TradingView application or the website. So if you can spend some time and you can look around, you will find so many factors here. There is a search box here. There are certain assets that are here on the right side. This is a panel which contains all your assets, the news that is happening down below here. And then the TradingView gives the data about this earning, what is the dividend that is happening to a certain asset. Okay, the income statements of that particular asset on the right side, if you're able to see where I'm scrolling. And then it will also give you a suggestion whether you can buy it or not. So this is about the basic. Here, you can see different assets that you can create, and I'm going to tell you how to create these. Here you got certain icons, indices, stocks, crypto, forex, futures, and bonds. You can get into any of these markets and then identify your particular asset or a stock or ETF, and then find the technical and get into the technical analysis. So stocks, and this particular platform helps you to do a technical analysis of any asset in the world. You go down, and here you get editor picks, where you can give your opinion, or you can take any author who's giving their own opinion about the particular markets, and you can go down and then you get free videos and then you can educate and update yourself about all these news that are happening down. This gives you live news about all the factors that are happening all around the world. You can get yourself acquainted with these. These are stocks of the world. So this is the front page. And then you got your assets here. You got the news that is pertaining to the certain asset. Let's say if I press this particular asset, the same asset's news is explained onto the below of this. And I'm presented with this wall on the left side where I can understand about this. This is Asian Paints, and you can see the data that it is presenting to you with the statistics. This is the fundamental analysis of this particular asset. Dividend ratio. It gives you information. Asian Paint views, chart, close. Everything pertaining to the asset that I've just clicked. In the search box here, you can simply type in whatever you want to see. For example, we can go to a very broad aspect, Nifty, and select Nifty 50. And then you are presented with this chart. So get yourself acquainted with this web page. Here, and if you can see where I'm highlighting my cursor with, on the left side, this is the place where you can directly search. You can add any commodity. This chart is our price time chart. Okay. The x-axis is dealing with time, and the y-axis is dealing with the price, which it is mentioned on this part of the chart. You can see it is from down below 16,000 here, and today it is the latest price 19,189, and whatever is the current price, it is shown in a highlight. Here on the left side, there are certain tools that you can use them to alter this particular chart. And the first one you've got are trend lines. So there is something called a trend line, arrow, ray. There are so many lines that you can use, but the most commonly used is a trend line. So what does a trend line do? You select it to understand the movement of a particular asset, whether it is going up or down. If it is going up, you select the downs, you draw a line, at least joining 3 lower points to give you an understanding of the direction of the trend. So this is how we can draw or use this tool to say that this is an uptrending. So whenever we open a particular chart, you get to see we have to use a standardized method of using the chart. And here we use auto. Auto is there are two options. One is auto and log. Log is using the same values in a percentage, and auto is using the ratios. And this x-axis is pertaining to time. If you can see the July, June, May, April, this is the years. Simply by scrolling down on the wheel, you can reduce the time frame, timeline. I'm simply bringing down the timeline. So by doing this, you can bring about a lot of time in one particular window. This is by going down back on the wheel of my mouse. And doing the opposite gets you to a very fine timeline. I hopefully you understand. So the chart that we are seeing here is called the line chart. And to change it, this is where we select the type of chart. So we got bars. This is how a bar pattern looks like. This is candles. This is how a candle looks like. This is hollow candle. The most commonly used is either a line or a candle. You can select a line, and these are the closing prices of the trade that's happening at the end of every day. And then when you join them, a certain form happens. This is the form. Okay, and here on the top side, at around 11 o'clock, you can see there are certain indicators here. We will come to indicators at a later part. These are certain tools that we take the help from to help in understanding our chart patterns. Okay, and as you can see here on the left, this particular trend line, there is something called horizontal line. Horizontal line is, you just select the horizontal line, you click it, and then it creates a line at a certain price value. You can definitely change its position. You can put it wherever you want to. The use of these horizontal lines is, we'll probably get into in some time. So this is horizontal line, and then you can take a vertical line. Vertical lines are indicating a certain time frame. If I zoom in and if I select on this particular line and I go to settings, it will show you what day and time this particular line is taken from. The most commonly used pattern is down below. You can see a day, 5 days, 1 month, 3 months, 6 months, and all. So we usually follow 1 year, and 1 day. You can delete them, or you can simply press this one. The next tool that you have got here on the left side is retracement or multiple tools. Of these, the most commonly used are the Fibonacci retracement tool and Fibonacci extension. Then you got a drawing tool where you can take the brush and then simply draw something over here. There's a text tool. There are patterns. Okay. So next, I would like to tell you about how to add a particular asset into your watch list. You can create any number of watch lists And in the free version, I think you can use up to 7 of them. So I've created certain watch lists here. You create a watch list, place this plus icon, and search for certain asset, probably gold. And you select it, it goes onto this side. So this is, and whenever you selected a particular asset, make sure that it is auto. The time frame is 1 year and 1 day. And the chart pattern that you're seeing is either a line or a candle. So we'll start with the basic line. So by simply looking at this particular chart, you can say that the gold has been doing well, it's going up, though we have seen a little changes. If I go back in time, you can see what's happening with the gold. So what are we doing here? This is the technical analysis of a particular asset. We are trying to understand what happened here till where it went down, and then subsequently what happened, and then why did it go down? Why do we need to do this? So that we understand this particular data and then be prepared for what might come tomorrow. So if we have to see what's happening here, we are doing this analysis to make a prediction what might happen tomorrow, where this line is going to come, whether it is going to go up or whether it is going to go down. And the information or this data, if you are expecting this particular line to go up, you are going to buy it and sell it when it is at the top. Or if you expect it to go down, then you can sell it. So this is technical analysis. Understanding the past data to make a prediction. And if you're confident about the prediction, then you can take a call whether you're going to buy it or sell it. So we can always go back to our favorite, which is our Nifty. And we can select a different pattern to understand the movement. So as you all know, then our Nifty has touched the highest ever. And what we must be prepared for, whether this is going to go up tomorrow or whether it is going to dip tomorrow. Am I clear? Is my sound audible?
Yes, sir.
I'm just. So do we go deep into the technical analysis, or this is plain enough?
So
No,
you said,
yes, sir, please tell.
Sir. Sir.
no, you mentioned three things, no, sir. When how to predict about a reversal,
Yeah, reverse.
etc.
Okay.
Probably you can.
Arjun, you just tell them about RBM.
Sir.
And the left-hand column, all the tools.
All the tools, sir? Okay.
No, don't tell them individually about Fibonacci. Only what all tools are present in RBM.
Okay.
And where are the indicators? And the top portion, what are the indicators? Like how, where do you RSA, where to see for RSA, MACD, how to add them? Where to see for moving averages?
Okay. So coming back to our presentation here, we would We have seen two types of trend lines. One was the trend line that we have joined here and we have shown you. And the next line that I've shown you was a horizontal line and a vertical line. Horizontal line, as I've told you, was a particular price frame. This is pertaining to the X line. So I can put a line anywhere. So this is, if I say I put a line here, and then I draw it up and down. This is one way to use this particular tool. And then I draw another line, a vertical line, put it here. Then this is a particular day. This is a time frame. So these are the two most important tools that we will have to use regularly. And the next tools that are very important are the Fibonacci retracement and trend-based Fibonacci extension. We use these to anticipate the price movement. Retracement is you simply take 2 points in time and then you extend the line and it does its own math and it creates you certain levels. These particular levels are created by the computer based on the Fibonacci calculation. So that is 0.7, 0.6, 0.5, 0.3, 0.2, and 1. So by simply taking 2 points in time, a time here and a time here, it could be anywhere. We are just selecting 2 particular points and a price levels, and then it creates a certain levels. This is based on the theory of Fibonacci, and it is believed that a particular action might happen at these particular ratios. This is another tool. This is a very important tool where we can use this to anticipate a certain action at a certain ratio. By simply drawing it here, and if I zoom it in here, you can see that a certain particular action always happens at these levels. If you can see here, there was a certain action above this, there was certain action at this level, there was certain action here, whether it might be taking down. So a Fibonacci trend-based extension, this is Fibonacci retracement is a tool that you select 2 particular price frames over a time intervals, and then it predicts or it shows you the levels, and then you study these levels to understand a particular price action that might happen at that particular interval here. This is only to understand the price action. There is another tool which we take to predict the future outcome. What might happen after this, whether it is going to fall down or if the price is going to go up. The tool that you would like to use is trend-based Fibonacci extension. So you select a recent price the recent low, the recent high, and then you extend it. So this particular tool is called a Fibonacci trend-based extension. I have taken 2 particular frames. One was the recent low and the recent highest, and then I've extended it, and the computer has created a certain level that can, the probability of the price changing at these levels is about 30%. but then you can expect an action. This particular price might ultimately go up till this level, which is 20.
The point, 1 point before.
Sir?
And Fibonacci will be taught to them in the other sessions. So just
Sir,
show
okay.
them the tools, that's all, where all it
Okay.
is. Development.
Sir, I hope you understood these two particular tools. One is a retracement and one is extension. The retracement tools gives you the levels at which you can expect a particular price action, and Fibonacci trend-based extension gives you the power to predict the future, a little extra power that you can use by this tool to expect the next particular action. So this is another tool, and I think these are the most important tools that are enough for us to get into the technical analysis. Then there are certain indicators. If you can see here on the top at around 11 o'clock, there is something called indicators, and there are n number of indicators. You simply select here and you can search the indicators. So what are indicators? Indicators are a certain calculations that are inbuilt into this particular software, which gives you a particular formulas that are entered. For example, I would say RSI. These can be divided into overlays and underlays, and I'm going to show you the difference between them. Overlay. So one of the most basic indicator is this volume. So what I've done, I've gone to this particular indicator. In the search, I have selected volume. This is of no use. This is just to show you how we can use a particular indicator. So this is an underlay, and down below the chart here you can see a certain colors, and there are certain patterns. Some are in green and some are in red. These indicate the volume of trading that has happened on this particular day. So subsequently, there is another indicator called relative strength index. This is an underlay.
Hello, Harish Garu.
Can you see this? Relative strength index is an indicator that tells us the amount of buyers in the market. This calculation is based on the averages, and a graph is created. So from this indicator, we can say that the strength of the buyers is at its peak. Next. There's another indicator called moving average, convergence, and divergence. We have got a couple of patterns here. This is the averages of the past week averages of the buying and selling, and then a pattern is created that is showing you what has happened, the averages of the price that has happened in this particular time frame, and then you can see here. This is exactly correlating with the pattern here. So this is one indicator, this is another indicator. So these are three underlay indicators that you have seen: volume, RSI, and MACD. There are certain overlay indicators, indicators that go along with the chart and give you the certain information. And one of the most famous is Ichimoku. So please don't get scared with this kind of a pattern. This has got a lot of information. It has the RSI, it has got MACD, and it has got volume inbuilt in one particular chart. So now we have done our particular technical analysis, and then you want to take a decision whether you want to enter at here or no. So we have used certain indicators. I think I'll display certain tools here, and then we probably might take a decision by that. And then I'll tell you what is the reversal entry, what is a momentum entry, and what is a breakout entry. So what we can do is, by using this particular tool, a trend-based Fibonacci extension, we are trying to predict the future movement.
Ideal చెరువు అంటారా అర్జున్ use the point from November. Yeah. Shift it. Ashoka from November you put the point. Started from after September, one point is there. Ideal చెరువు పక్కన.
Sir.
చెరువు రోడ్ దానికి అపోజిట్ రోడ్ ఇది అన్నమాట ఇటువైపు.
From here.
Yeah. లోపల అటువైపు రెయిన్బో విస్టా అయిపోతుంది కదా సార్. కోట్పల్లి నుంచి ఐడియల్ చెరువు పక్కన. ఆ రోడ్డుకి ఇది ఆపోజిట్ వైపు. No, not about lot like that. You have to use the top of the previous one.
This one, sir?
Yeah, that one. Then from there you go.
So we have taken data from this particular time frame, that was November, and the previous high, and then I've extended it down below, and then we've got these certain ratios. Of these certain ratios, these are very important: the 0.6, 0.3, and 0.7. You can see these lines. By using a horizontal line, we can simply create lines here. So by using the data of Fibonacci trend-based extension, by setting certain these lines, I've just taken horizontal lines and I've created these. Now I can delete this. I can simply close this. And I can expect a particular price action to happen at these levels. And historically, if you look into, I've taken the data from a point in time back in the time at this time frame and at this time frame. Using these two time frames, I've extended and I've taken a certain line. And then you can be pretty much sure that the price has taken a good action at these levels. Can you see this? After here, the price has gone down, reaching a particular height. It slowed down here, then it has bounced back a little from this price, then taken a reversal from here, and then it went down. And after a certain point back in time, it has gone up. Use this particular line, gone up. Use this particular line and then gone up. So the probability of it going down is very much there, but the probability of it touching 20169 is also very much there. This is simply by using a particular tools, we can say that there's a 70% chance that this is what might happen. the price might go down till here. It might go down till here and go up. It might go down till here and go up. It might go down till here. And the peak it might be till here. This is based on a Fibonacci trend based extension. So now what do we do? Now what do we do here? We are at this. We are today on the 3rd of July. We are here. And we know that the price might take a certain action here. It might go to down here and it might go down here. We need more information. We need more analysis to help strengthen in our decision. That's when we take the use of these indicators. Well, I would like to use another indicator like I've shown you before, relative strength. So this particular indicator is telling me what's happening to the buyers of the market. Buy strength. And according to this indicator, we take the upper limit as 70. So any line that has touched 70 or gone up might take a turn down. As you have seen here in the month of let's take November. This has happened. It has touched here and it has gone down. So it has touched here and the chances of buyers starting to sell is very much likely, but a sideways trend is also very much possible. So it is again putting us in a doubt whether we'll have to enter at this particular point or no, looking at these two factors. So I'm going to close this indicator and I want to use another indicator that might help me in taking a decision, which might be a moving average. So this particular indicator is giving me all this data in the same chart. You can see that these averages are on their peaks, and you can see over here a particular divergence has happened after a particular sale, and then there is increasing. So this is a little on the positive, but this is not strong enough to help you to take a decision to enter at this particular level. So back in time, if you enter here tomorrow and you think that it is going up, expecting that this particular trend is going to continue, your entry is called as momentum entry, where you are expecting a particular price action to continue in the same direction and going up. So with that analysis in mind and you entering at this point, expecting it to go up is called as a momentum entry. And then next. What are these lines? I have taken these lines averaging at the previous highest zone where a certain action has happened, and the lowest timeline here, the lowest price, the highest price, and I've just simply drawn these lines. If you have taken an entry somewhere here or here, where you are expecting a certain trend to change its direction and then take an uptrend, this is called as a reversal entry. This is called reversal entry, where a particular trend, that this is the down trend, as you can see, and then you expect a particular movement to happen here and your price to go up. You are entering somewhere here, it is called as a reversal entry. Identifying an asset with and entering at the reversal point is the best entry. And if you stick on for long term, you can get this kind of a profit. This is called reversal entry. And entering here, expecting the price to continue to do the same thing is called as momentum entry. And the another important one is called as a breakout entry. Breakout entry is when to these, I draw a trend line. So this is a trend line. I have taken a certain horizontal line where a particular price action has happened, like we have discussed. This is a trend line that indicates a downtrend. How do we draw a trend line? Is we take the tops of the previous price action and then we extend the line. So any price that is breaking a trend line and going up, if this particular price has followed to go down over here, we call that as a downtrend. The price is breaking this trend line and it is going up, and it is calling as we call this as a breakout entry. So breakout entries are also very powerful, and entering at a breakout also gives a good profit. Identifying a reversal is the best, but these are of very rare opportunities. If you correlate with the underlying indicators over here, it is very unlikely that a person can take a decision over here where you can see at this downtrend, there's a little change here, and then you can see an uptrend. So reversal, breakout, momentum. So as we take this example, entering a momentum entry is never a wise idea unless and until you've got the information and there is a speculation that might happen tomorrow and the news is supporting. So this has the highest risk. Entering at a reversal has the best potential of profit if other indicators are supporting so. And always a breakout entry never goes down. It always continues to go down. So this is the safest bet. A breakout entry is always the safest bet. And an experienced person entering at the reversal is the way to go. Identifying such stocks is, and sharing them among the group is the best way to go about it. So this is reversal, this is breakout, and this is momentum entry. So I think I can conclude my presentation here. Like we have discussed our tools, we have discussed the technical analysis, and probably it might help you in taking a certain decision. Sir?
Dr. Harish Gopal, sir.
Yes, sir. So thanks, Dr. Arjun, for telling the basics of trading view. I know it is difficult not to indulge in the details of the individual indicators, but in subsequent sessions we will take that individual indicators and everything. So I think it was a neat, clear presentation. I know many people who are seeing for the first time has got many doubts. Only thing is that you have to practice this thing over and over again to know how to go about it. Okay, sir. So any questions means we'll take it. Individual doubts about individual indicators, we are going to take about like moving averages, Fibonacci, overlay and underlay indicator. That will be dealt in the subsequent sessions.
Yeah.
Thank you. So over to you, Sadeh, sir.
Yeah. Thank you, Dr. Harish Gopal, sir, and Dr. Arjun Reddy, sir. This was a very basic introduction of the difficult subject called technical analysis. Many of our participants who are beginners or little experienced people are well aware of fundamental analysis because it is easier to grasp. Most of it is in the form of words, whereas this is in the form of graphs. So pediatricians are well aware of the graphs. They do have a charts in the clinic and in the practice, in the profession, the road to health charts, the weight chart, the head circumference chart, the height chart. So they know the health of the baby. Similarly, Dr. Arjun Reddy sir has introduced how to look at the charts of an asset or a stock or any commodity and trace the history and use some tools to predict the future. And he has basically also told us where exactly you must enter or buy, or where exactly you must sell. So it takes a lot of practice and looking at the very every day these charts in a best app which Dr. Arjun has explained today on a TradingView website. Don't get confused with so many indicators, so many lines and everything and names. Try to see the trends, try to see the graph of the, say, Nifty 50. Easiest to look at it, how it is behaving every day. He has showed us two particular charts. One is a line chart, other he has shown us a candlesticks chart. I'm sure Dr. Harish Gopal sir will eventually schedule explanation of a candlestick charts, how to interpret, how to gather information about candlesticks charts in future very shortly from a basic level onwards. So TradingView, please remember, is a very good app. In your free time, have a look at it, explore it. It takes a lot of experience to become ease to operations, and you will get a lot of information, and computer itself generates many things in it. You just have to use them. Don't try to use a lot of underlays or overlays. It may confuse you. Just try to see the line chart and the candlestick charts, and probably RBM, that is what he has told us in the end. Reversal entry, when the trend is predicting that the line may go up, the price action will take place by going uptrend, or it may be a downtrend, or it may be a sideways. But three particular points in the chart we have to predict and look at it: reversal trend, momentum entry, and breakout entries. So these are the critical points which comes over a period of time of a repeated experience. Even I am very new to this. I'm learning. I know it is difficult, but charts, we are well versed as pediatricians. We do look at a lot of charts. So this is part and parcel of a well gathered information decision of buying, selling, and when to sell, and when to buy. Many of our doctors are experts. We have seen Dr. Naresh Biyani sir has displayed in two talks before. He has got only volume and price. So many people believe that price is God, that is bhav bhagwan che. So, and volume. Suppose there are a lot of volume which underlay Dr. Arjun sir has mentioned. A lot of people are buying and the trend is going up. Maybe we know there is a lot of interest in that particular share, and there is a lot of volume in selling. So the trend is falling down, which our candlestick charts will tell us in future. So with this few words, I will try and close today's program while requesting Arjun sir to be there with us to answer this subject related queries for the next 1 week in the WhatsApp group. If you have time, kindly be patient and answer the questions by the participants. This WhatsApp group has got more than 1,100 participants. Similarly, we have got 1 or 2 groups also, group 2, group 3. And Dr. Harish Gopal sir is coordinating academically, selecting the topics, speakers. We are grateful to all the speakers who have accepted and consented to talk on one individual topic on every Sunday for the next 1 month. Thank you very much. We now take leave.
Thank you, sir.
We'll close the session.
Bye-bye.
Bye.